Hi, and welcome to this short presentation of SECO. I'm Marco Parisi, Head of Investor Relations, and in the next 5 minutes, I would like to present you the results of SECO in full year 2021. So, in a year made very difficult by the component shortage on the market, we generated an overall net sales growth of 47% versus 2020, of which 28% of organic. And our adjusted EBITDA grew more than proportionally at 59%. In the last quarter of the year, we have been able to further accelerate our growth path, with revenue growing by 113% versus Q4 2020, and an organic growth of 51% with EBITDA margin at 25%. In this scenario, we have also been able to maintain our GPM stable at 47%, despite not having been able to ship approximately 4 million euro of goods rescheduled for Q1 2022 due to the lack of certain components on the market. As you know, in March we launched Clea, our IoT and artificial intelligence software platform, which further accelerated in the last 3 months of the year with 2.2 million euro of revenue in the last quarter. Also, in 2021, this has been a very important year in terms of M&A. In July, we acquired Oro Networks to expand our firepower in the field of artificial intelligence, while in October, we acquired Garz & Fricke Group to further expand our direct presence in the DACH market. So, to begin with, I think it's very important to update you on how the situation unfolded because of the component shortage. This surely had an impact on our business in terms of GPM and forcing us to invest approximately 12 million euro into our inventory, to make sure that as many components as possible were available to deliver our products. In terms of GPM, if you compare the Q1 incidents with almost zero revenue from Clea with the Q4, where Clea accounted for over 2 million, you can sense how the shortage impacts on our edge computing business. Producing our goods in-house has surely helped to control a large portion of the process and make sure there were no manufacturing delays. We also work with our suppliers and brokers to get the components. We redesigned products so that missing components could be replaced with available ones, and we negotiated some temporary price increases with our customers where necessary. At the end, even if we were not able to ship on time approximately 4 million euro of goods, we managed to post an organic growth of 51% in a quarter with an EBITDA margin at 25%, proving that the software business and the operating leverage effect have proved our business to be very resilient when facing external shocks. Going back to the full year results, total revenue grew by 46% versus 2020, with an important acceleration in the second half of the year, and a growth driven by the Clea business, a recovery in sectors like industrial, fitness, transportation, and vending, and a growth well distributed across EMEA, APAC, and the US markets. Gross profit margin remained substantially stable in percentage terms, with software business and the temporary price increases offsetting the difficulties deriving from the components shortage. Adjusted EBITDA grew by 59%, while adjusted net income grew by 47% versus 2020. While we kept investing in skilled people and R&D to sustain our growth, we have also been able to generate an important operating leverage effect. From a financial perspective, our cash flow from operation improved by 33% versus 2020, despite the large cash absorption from the inventory stock up we had to do to procure components in the shortage scenario. Net debt was also impacted by the large acquisition of Garz & Fricke, and our leverage at the end of the year is 3.2 times the pro forma adjusted EBITDA. To conclude, let's give a look at how 2022 started. We have observed a general increase in visibility on both 2022 and 2023. For this reason, we released an official guidance on our Q1 revenue, which targets an organic growth above 50% versus Q1 2021. This comes on the back of an order backlog of 157 million, which more than doubled versus February of last year, and a pipeline of Clea growing in a very promising way. Finally, we made a partnership with Exane, a partner thanks to which we were able to introduce cybersecurity solution into our offering starting from the coming months. Thank you very much for your attention and looking forward to speak soon.
Since you watched this company video until the end, I'm guessing you like the video. That's probably because we work very hard to create the most engaging and value-added content possible for you. If you're a stock-listed company or corporation and want to find out how we at C11A can make a company video with and about you, please email us at community@c11a.com.